beached whale on the...
Thankful that God provides.
Professionals will be investing right now to help serve churches.
And let's talk about ministry, and let's talk about how we can serve God and do what God has us to do.
Okay, so I want to first of all just give you a heads up that we're going to have a little discussion in a few slides here, and I'd like you to put yourself in the mindset of if you are the finance person that dealing with the financial matters in your ministry, then you're right at the good spot. But maybe you're not that person, but try to put yourself for a moment in their shoes if you can. And we want to talk about a couple issues. Now, I was over in the session just a few moments ago in the other facility, and they went through a number of the COVID, 2020 financial thumbs up and thumbs down kind of things, and that was a great list, and I've actually written those out. But I'm kind of wondering from your perspective, or are you putting yourself in the shoes of the perspective of the finance people in your ministry, and what were the peaks and what were the valleys for in that regard? And then especially for you finance people that are geeky enough to know what a balance sheet is, okay? So your assets minus your liabilities and what's left over. Okay, what maybe differences might you see or saw from 1/1/2020 to 1/1/2021? I don't know if that's going to get any sort of conversation conjured up or not, but we'll revisit that. I took some extensive notes from the last session, all the things they were bringing up. So I'll just quickly review those in a few moments, just so that we don't have to rehash everything that you may have already heard, but maybe you were in here and you missed some of that. I do want to share just a little bit about my family. So camp has been an amazing blessing to the Fafi family. And so this created 45 years ago this summer, Lori and me. So on the right-hand side there is our daughter and her 3 boys and her husband, Josh. Josh is a pastor in the Raleigh, North Carolina area. Carrie served at Northland Camp 2 years, as 1 year as a op staff and 1 year as a counselor. Had amazing conversations with Carrie on Saturdays about what God did that week in her cabin, especially that second year. Josh served out at Red Cliff Camp for a summer. And then in the middle there is Micah and his family. They live in Cheyenne, Wyoming. They have two girls. Micah served at Northland for a summer, and that was an awesome experience for him. And then on the far left is our son Kyle and his family. And he was at Camp Calvary for a summer. That summer, he had to go through senior life-saving training, so he could be a lifeguard there. He did that. He was about 21 years old at the time, doing that with 15-year-old high school kids in the local pool. But he did it. And then he also had a big run-in with poison ivy that summer. That was quite an interesting introduction to Camp Calvary. But my wife Lori got saved as a teenager at a camp in Minnesota that was put on by the Minnesota Baptist Association. They rented some other facilities. She got saved. For me as a boy, so I got saved as a 4-year-old boy. Both Lori and I are PKs. And I just really got saved. My parents made sure I understood that I was a sinner. Right, okay. Little Corey, he was a sinner. But I understood that sin separated me from God. And that Jesus had solved that problem for me. That's probably about the best I could have explained it as a 4-year-old, but I just really got saved. Well, beginning as an 8-year-old through 18, I went every summer to Camp Chautauqua. And I made spiritual decisions every summer, even as an 8-year-old. And I would go back and maybe have to give a testimony at church. And I was on fire for God. Well, that lasted for a week or two, right? Okay. But I knew what it was as a young adult. I knew what it was to have a desire for God. And that was awesome. And so we took our family to family camp at Northland for like 10 years in a row while our kids were young. And so camp has been just amazing benefit to the Fafi family. And now at Ministry CPA, we've been privileged to serve a number of camps. And so it's been a blessing to us. Now, So that's kind of our story. The story of Ministry CPA, here's our team. 3 of these folks up here are full-time staff accountants or senior accountants, all graduates of Maranatha Baptist University, their accounting program. I'm right there in Watertown, Wisconsin, so I get the cherry pick, the best ones, okay, and I got them, right? And the awesome team that God's provided to us. My wife works in the firm as well. And she's very busy on the front end of taxes. She does a lot of data entry. So she said, I can't come out to Southern California with you. I said, okay, I'd be glad to have you come. And then other members of our team there, and a few little notes about our team on the slide that you can read on your own. But the PowerPoint presentation we're going to cover today, and I've given you just a few of the slides, but the notes page view in this PowerPoint has a lot more, the things that we will not have time to talk about, okay? That PowerPoint presentation and the one I'll share tomorrow are on our website under resources. So if you really wanted to grab more of this, it would be available there for you. And so just as a resource, and it's available, like I said, on our website. So, I thought we were going to have a whiteboard, and that's fine. We don't need a whiteboard. We can just talk to each other. But I want to share quickly what were some of the finance peaks and valleys that were brought up just in the last session that you may have been in or may not have. And then let's talk about, again, put yourself in your role of the finance person. What were those peaks and valleys? What would that balance sheet look like differently today than it did a year ago? And that's going to come out in some of the conversation we're going to have over the next 45 minutes, all right? So they talked about, here are some of the ups and downs, okay? So the fact that some camps had reserves going into the year was a great help. Some said, boy, I wish we would have made stronger cuts earlier. Sam talked about max conserve was their kind of like the idea they had here. The government and state grant programs helped some camps. Those were our experience, and we work with about over 100 churches and Christian ministries on an annual basis across the country. So we saw big variances between what one state would do and what another state would do. Some states kept it open, available to camps and Christian ministries for weeks, maybe months. Other places just like hardly let the word get out, and it was hard to even participate. That was all over the map. One said they had weekly board meetings, which were really helpful. PPP, okay, so some got involved in PPP 1, others are getting involved again now in PPP 2. We'll talk about that a little bit. Churches gave. Deferred maintenance was either accelerated or deferred depending on where things were at. Some saw new sources of income. The constituencies responded in different ways, okay, and pluses and minuses there. It was very valuable that they would share their needs with their constituencies honestly, so that donors would know truly what the needs were, and they did respond. Okay, well that's a mouthful, right? So again, you're maybe the finance person, or you're putting yourself in the role of the finance person. What else besides what we maybe have already shared were those peaks and valleys for your ministry?
I think it was difficult just whenever you look at this amount of money is spent and this amount of ministry is done. When you take, boy, we didn't get to do a whole lot of ministry, but really it still cost almost the same to run, to keep all the staff and to be doing the things that we're doing. Save on groceries, but a lot of your other things are still the same amount of money. That was a down part of it, to think of that ratio of investment versus production of fruit, so to speak.
Sure. The difference between, in accountant geeky terms, the difference between fixed and variable costs, okay?
Yeah, right.
And
fixed
variable costs is very small.
Yeah, fixed costs are just so big.
Right.
I think a peak was definitely seeing God provide in unique ways,
Right.
and I'm sure that's across the board, just in different ways than have been provided in many years past. And it was tough to end of the year in the red, for the normal budget, since it hasn't happened, at least for our camp, in a long, long time. But at the same point, we had the reserves going in to be able to make, and it was a whole lot less red than we thought it would be because of God's provision.
Right.
So
you think about what, we're going to talk about reserves and when do you know that you're hoarding versus when do you know that you're really running too close, and if you have reserves, what was that money supposed to be spent on? Well, you're not owned by an entrepreneur. Okay, that's God's money.
Right.
And it's okay that those reserves. Now, maybe the next step has to be to restore some of those reserves, but that was God's money. It was okay. It was okay. What else?
I mean, we were able to run this summer, but we had fewer campers, but our food costs, like the food was all over the map and actually spiked, and so we spent more money on food even though we had less campers. So that was just something very interesting that we kind of ran into.
Okay. Interesting.
We saw a huge increase in donor support. We were able to be authentic in our newsletters with the needs, and it was incredible, the outpouring that God gave to us. And we were actually going into 2021 with the strongest balance sheet that we've ever had. It's amazing. So we'll see what happens in 2021. But God was just exceedingly good.
I'll second what he said. The donor support and being able to pay it forward has just been incredible.
Now, go ahead.
I'll add to that. We've ended the year very similarly with the best balance sheet ever, and for us looking back, all of our full-time staff is mission supported, and so we don't depend on the income of summer tuition to pay for most of our operating expenses. And then we also had a huge fundraiser, and 3 times as much money as we had targeted as our fundraising goal actually came in. It just surprised us to see God do that and to give abundantly in a year that could have been very lean.
So we've had, many conversations over the course of this past year with not only folks like you, but also pastors, the finance people at churches. Initially, we were seeing a very nice spike in giving. So very nice uptick in giving. We weren't sure if that was the donors whom God had prepared to give abundantly, and maybe they had the cash flow so they could give a big chunk early on, but yet they weren't going to be able to sustain it long term. What we saw, at least I would say a generalization across many churches, was a little bit of a lull in the, say, July, August area, but then it seemed to pick back up toward the end of the year. So, God provided. The stimulus checks, okay? So we were trying to encourage through our blog people to think about, wait a second, did you really need that stimulus check? And how about you take that stimulus check and you send it some places? I didn't get much feedback that really was happening, but and again, some families, they just needed that stimulus check to survive. But there was others that maybe responded. Online giving, anything unique there for you with regard to online giving this past year?
We saw it increase, but I think it's just generally slowly been increasing as people become aware of the opportunity and the ease of it.
Okay.
So I don't know that it was anything special, but it was increased.
Okay.
And we've seen new donors, like, I don't know, I don't know how the word always gets out, but it's really interesting that we have people that, like, they'll give online and we're like, do you know who that was? I don't know who that was, they had $500, so, yeah, that was definitely different. It seems like people are looking for where they can help because they know, boy, these people have to be suffering in some way, with not running camps and that kind of thing.
Right. So what I want to be able to share is kind of like some generalizations of what we saw in some of the peaks and valleys. Quickly do this. I've got extensive notes in this particular notes page view, but then share some things that we're imagining for 2021, both opportunities and then cautions that we think we all should be taking care of and thinking about. So in the revenues, costs, and budget area, some of the peaks we saw were ministries, and I'm talking across a wide swath of ministries. So we don't serve just churches and just camps, but we have educational institutions, a wide group of kind of ministries. Those that had fairly sophisticated budget systems seem to be able to, look at those budgets and make the adjustments more quickly than others. So the maturity of the budget system, certainly reserves certainly obviously helped. One of the heuristics that we use in sharing with budget projections, and really it's a very loosey-goosey heuristic or rule of thumb, is 15% of your annual operating budget in the general fund reserve, as a cushion. 15% of your annual budget. Well, you also got to look at how volatile can things be because of your constituency, or now I'd say we probably all need to increase that 15% beyond that after seeing some of the things we've seen. And I'm not talking about designated funds. Those need to be kept separate as far as the amount of funds that you have available with designated funds. I'm talking about your general fund budget, 15% as a target. Obviously, loss of the valleys were obviously, we've been talking about that. Loss of program revenues, additional costs, particularly when you've got high fixed costs, either in commitment of salaries or debt. That's another fixed cost that were some of the valleys this past year. On the government program side, the peaks and valleys, there were a lot of programs available. PPP was used pretty substantially by our clients. Very few chose not to use PPP. One of the valleys with that was all the confusion about it. And just the concern, okay, wait a second, do we take this money? I had several Zoom calls with boards of either churches or boards of Christian ministries where they just wanted to get comfortable. Should we be doing this, and what are the cautions we should have as far as government intrusion? So the initial first wave of PPP, fairly soon, there were just many FAQs that the SBA came out with just like that, and then they kept adding. But one of the FAQs and one of the proclamations, if you want to put it that way, by the SBA was, no, religious ministries can participate. You don't have to satisfy the non-discriminatory requirements. And then with PPP2, the actual law, which I feel more comfortable about the law saying this than just the SBA saying, yeah, we're not going to go after Christian ministries, but they did give us those assurances even with PPP1, actually codified that there's a code section within the SBA loan requirements, and I'm not going to remember that code section, but subparagraph K was specifically cited by Congress and then signed by the president to say that subparagraph K does not apply in this situation. What does subparagraph K say? It says you can't take SBA money if you're a religious institution. That was totally thrown out. So those things. But just the complexity of, okay, Families First Act, and do we qualify for the employee retention credit, and can we do both, this and that, and just what's going to be forgiven, and of course initially 8 weeks and then 24 weeks, and what if we want to do someplace in between, and so is your head swimming yet? Right. Okay. Right. And then CAA came out. That's the so CARES Act at least sounded like it belonged, CARES Act. Well, that's a good name, coronavirus, et cetera, right? Well, now we have the latest one is the CAA, the Consolidated Appropriations Act. Now that just rolls off your tongue, really nice, right? CAA, we've been calling it. We actually put together a summary, a very brief summary, just try to highlight the key things. It's on our letterhead, it's about a page and a half here. You're welcome to it if at the end, it's something that, one more resource. There's a whole lot more going on with that. But the complexity, of course, they were talking about over there in that session, all the government orders was an issue. Giving, peaks and valleys, I think we pretty well covered that. Of course, for your donors in 2020 are going to be able to knock off $300 off of their adjusted gross income, even if they can't itemize. In 2021, it's going to be $600. So, if someone's in a 12 or 22% tax bracket, it saves them several $100s. Your donors aren't giving because they get a $600 write-off. Okay, but it is something that you can share with them. The valley was, this is a personal valley, because Lori and I did respond this way with our with the stimulus that came to us. We're kind of like, what do we need this for? Well, I'm not going to send it back to the government because they're just going to give it to somebody else and just waste it. So, we just felt some ministries that were needed and some situations that were needed. We responded to it. And maybe that happened more than, people don't brag up what they do with their donations, but anyway, I hope more of that happened. Shareholder uncertainty. You're prepared. You're well prepared, and donors and loyal donors responded quickly. I think some of the values about stakeholder uncertainty again came out in some of the conversations that's been going on. Do I send my family or my children to camp, even though they're having camp, because what if they come back with COVID? Or no, they're just gonna come back and then we can't do anything. We're gonna be sequestered in our house and in jail, if you will, in jail for 2 weeks. Some of that uncertainty. Did your marginal customers kind of go, well, I was kind of committed to camp and now I'm not. Others were saying, oh, we missed camp and we want to really get back into it. So that's uncertainty. And the last area, just the change, the idea of change. So Sam was talking about this. Matter of fact, I made some notes in his, he gave us these. That was a good conversation. Sam is just so comfortable with all this, right? I mean, and I guess our camps are generally, our camp clients are generally smaller camps. Okay, they're not large camps like this camp and some of the others. I think that make sure that you have that in your perspective and you think about that, and don't let that either discourage you or make you try to accomplish too much. So you just try all this extra stuff. But when he talked about managing shrink, there's this concept in business called 80-20, where 80% of your revenues are going to come from 20% of your activities or whatever. That's a business concept. I think you got to be. We all know we have to be careful about that because certain things are non-negotiable. You don't make any money off of such and such, but you never would dismiss it. But the idea to say we do have to look carefully at what we're doing, at our programs. Where is the most value for what our true mission is? I thought that was a good, both from a ministry side and a financial side. I really like it that he was talking about KPIs. Now, he didn't say key performance indicators, but they have them, okay? So the number of camper days, he said something in his session about 750 camper days is add or subtract staff. Wayne, do I have that right? Something like that? Okay, those are key performance indicators. So, do you have some key performance indicators, financial or otherwise, or do you need to think about what those key performance indicators are and then begin to, track them? And so I like that part of his discussion. The idea about big is not always better. So, just the small investments that we make in people's lives by faith. We may never hear the fruit of them until eternity, but that's the way we live. We walk by faith and not by sight. I appreciated his comments about that. And then just one that was a little bit, it brought concerns to me on the fearing shrink side. And not that Sam had it wrong, but this. So the concept here about someone else will lose their job, but I'll have to do the work of two people's work, okay? So I was a professor at Maranatha for 29 years until I retired 3 years ago, okay? So I keep track, I follow grads. I love to do that. It's part of the fruit of my life, okay? I have 3 working for me full-time. But conversation with one who's left camp ministry, was involved in some finance area and then some other operations areas, and then in some other areas, and then we lost some people in other areas. He's a very gracious guy and a very sharp guy, but he's no longer in camp ministry. And I don't know for sure this is what's going on, but it was like burnout. It was burnout for him. And I guess we just have to be careful about that. And maybe the shrinkage is necessary for the sake of our people. And that was something that came to me from that. Okay? So before we look at opportunities that we're seeing, I want to talk about the Consolidated Appropriations Act a little bit, so we're gonna get some, regulations and things, but it's meant to be helpful, okay? And we'll talk a little bit about budgeting systems and then vision casting, and we are at 27 minutes remaining, so we're gonna move along through that quickly. But what about just anything about 2020 before we move on to 2021? Any comments or thoughts that maybe some things I've said or someone else has said has got you thinking?
I think it was really good that, we had some time to really reflect and dig into changes and how we could make it better, like, this thing isn't gonna last forever, we hope, right? So how will we make this better? And we actually had time to have those meetings and make some adjustments even in facilities to make that workable. So that was good.
All right, so, Consolidated Appropriations Act. So I just want to, and I'm going to go through this pretty quickly, okay? So part of the act that was passed in December established a second wave of PPP. And even if you got the first one, you can still participate in this loan grant program. Hopefully grant turns into a grant, right? Different eligibility requirements. So 25% decline in gross receipts, or fully or partially shut down under government orders. That second one is always it's the more subjective thing, like, well, governor said we had to do this or that. Does that qualify? That was confusing from the very start. But the 25% decline in gross receipts, that includes both your program revenues, your contributions, and your designated gifts, all that factored in. Looking for a quarter where you've got 25% decline from previous year. It's 2.5 months worth of your 2019 payroll. Here's the kicker, and I've been watching. I haven't seen any update to this right now. The way the law was worded, any portion of that you could spend by March 31st, we're talking 6 weeks right now. If you went back and you said, well, we didn't do PPP2, we should do PPP2 because we were down more than 25%, I'd say, yeah, do it if you believe you should do it, and clear it with the proper authority within your board or whatever. But in order to be forgiven, you only have the next 6 weeks to spend the money, and the window is a minimum of 8 weeks. So we're going to run out of weeks in here. I can't believe that we haven't seen something yet, but Washington is just a mess right now anyway. But will there be something that'll come along the way that will stretch that out beyond March 31st? We don't know. I'd say this, if you decide to do it and turns out you don't get it until March 1st, and you only have 4 weeks worth of payroll that you're continue to pay out, well, you can always pay off the portion that you're not forgiven. That's what we were saying to people from the very start, when it was looking like, we were seeing this as we ran the numbers, we were saying that about 85% of those initial PPP1 loans was going to be forgiven based on 8 weeks of payroll, but then the other depends on how much you had in the other costs that would qualify. Okay, so if you had a mortgage, that would help you. If you didn't have a mortgage, you wouldn't have that expense. But your utilities, there was huge confusion about what they meant by truck utilities or transportation utilities. But anyway, it turns out to be irrelevant because they stretched it out to 24 weeks and it was just payroll. It was way easy to be forgiven. So that's the one that I'm a little bit don't know at this point, but that's what it says. I double checked. I just couldn't believe it would just run out that quickly, but that's what I've seen. Yeah.
This doesn't even apply to me, but I'm wondering, does that apply if it's your first loan, but you're applying under CAA?
I don't recall any distinction like that. Now, this was about a 6,000 page law. Okay, and so and it was CARES Act was laid out a little better, and I think it was just like 800 pages. Okay, the CARES Act, and we were able to fairly quickly get up to speed on the CARES Act. This one here, they've put different things in different places within those 6,000 pages. I have a PDF of the entire 6,000 pages, but trying to find stuff, and I converted it into a scannable document, and it's So I don't know. I'd say if you're in a position where you feel like you qualify, I would encourage you to get your board on the horn and figure out whether you should do it. That would be my advice, but you probably have to spend the money pretty quickly, at least for now. Okay, so employee retention credit, this is, even if you got a PPP-1, then this could be a very lucrative credit. Okay, now you had to have a pretty substantial decline, either 50% decline in a quarter in 2020, so the last 3 quarters of 2020, or 20% in like your first quarter of 2021. So you might not qualify for it, but if you do, it's very lucrative. Or again, this somewhat subjective, fully or partially shut down. These are refunds against your payroll tax. That's the 941, and if you 941, you totally get rid of any obligation there. You can get a check in the mail. The kicker is ministerial wages do not qualify. So if you're the director and you're an ordained or licensed minister and you're a SICA employee, you pay your own Social Security tax, that doesn't qualify. And that could be one of your bigger, especially smaller camps, that's one of your bigger numbers. But it is what it is there, okay? So that's the employee retention credit. And then just a couple other things from, last slide with regard to the CAA. So the Families First Coronavirus Relief Act and family leave credits, those are smaller credits, but they can add up, where you can pay up to 2 weeks, 2 weeks of their compensation. And you probably already did this. You probably already paid it. But you never took the credit, so you go back and amend. We actually were amending some 941s for clients last month to get this money back from them. And then this is kind of a sidebar, but independent contractors. So you should be treated as an employee, and you should be treating your people as employees. But if you have independent contractors, or some of your people are bivocational, okay, and they got self-employment income on the side, there's a credit available right now on that 2020 tax return to get you this. If you, for 10 days, for the first 10 days, for example, you couldn't really do your work. So we just had a situation where a client was a photographer, okay, and she couldn't go do photo shoots. If somebody would have called her and ordered it, she couldn't have done it. Well, between that and another kind of component of this, she got an extra $361 refund on her personal tax return, and she's just a small potatoes type photographer, okay? So especially bivocational people in bivocational ministry often have self-employment income. You need to look at that, because it's very possible you've got something coming there. This last one, I'm going to spend this up to $5,250 tax-free employer paydowns. I want to talk more. I'm going to talk more about that in workshop 2. But I think we're missing an opportunity here. I want to encourage us to not become targets. Okay, so some of my cautions are going to be, don't become targets. And some of it is, I'm concerned about our compliance at times in the camp area. And there's things we want to do because we'd like to do them because they work well for us. But are they really compliant? And I think there's some non-compliance kind of going on. And I speak that from just wide exposure to lots of different ministries, and we don't want to become targets. So that was CAA. Budget improvements. I mean, this I'm going to just bring all these up because we're down to 18 minutes, and I don't want to burn up all our time. If you've got some questions and we want to have some discussion. So there's lots of notes. Okay, so here's the notes page view. Here's the notes page view on this slide if you want to access it on our website. But I'd say in your budgeting, this is an opportunity to get on top of your budgeting process, or see improvements in your budgeting process. So these are things I would say to someone who came to us and said, we've had a budget, or we kind of, we present it to the board and then never look at it again. What are some things that you'd say these could be some of the areas you need to improve? First of all, cash is king. Don't worry about all those gap things that maybe some people tell you should do. You're not depreciating. You're not budgeting for depreciation. You know you need to make a major purchase and you're going to be financing part of it. Just consider those as like in and out. It's called the modified cash basis. Accountants know about these things. But keep it simple in regard to just budget on a cash basis. If you have to present generally accepted accounting principles reports later, and some of you have to go through even certified audits for the sake of your state compliance, particularly state compliance, not necessarily IRS compliance. So you got to fuss with those things. But when it comes to budgeting, just keep it cash in and cash out. Maybe some receivables and payables, but not getting involved any more than that. Dynamic budgeting is what we've come to call it, where you don't just establish the budget and the board approves it, and then you maybe even plug it into your software, but you never do anything with it. Okay? So we would say, no, use that as a tool. Look at those interim reports. I like a report that's laid out. So on your P&L, first column, obviously description of the accounts. Second column, the actual amount you've spent to date. So it's your December 31st report. Maybe you're on a fiscal year. You end in June. Well, you're not going to do that. You're December, okay? You're a December fiscal probably. So here you are through March 31st, okay? And you have your descriptions, your amounts through March 31st, which are not much, okay? Not much in revenues or whatever, but you know that. From year to year, you know that. But you have an annual budget. I think the next column is the annual budget. And then the percent of the annual budget you're at. So you look at program revenues. Oh, March 31st, we had a couple of retreats. We're at only 10% of our annual budget, and we're 25% through the year. It's okay, because a year ago you were at 9% of where you were heading. Okay, so you get to know those things, but then you're not always fussing with the budget. You use annual amounts in that budget, get those percentages. You look at certainly fixed costs through March 31st, you'd expect them to be about 25%. Salaries, maybe for example. Contingency fund. We like to encourage budgeting that involves a contingency fund. Now, a contingency fund is not a separate slush fund of money. It's actually an account in your budget. And I'd say put it in your general ledger and assign an amount to that budget. So if you're projecting revenues of 100, don't plan to spend 100. Plan to spend 90 or 95, realizing some either oopses or opportunities are going to come up. Your maintenance guy always has a wish list, right? The wish list. And you can never fund all the wish list, okay? So here you are. You've assigned 90% of your budget, of your projected revenues, right? Revenues are projected, expenditures are authorized. So you've projected revenues and you've authorized 90% of it to be spent. The last 10% in a budget account called contingency fund. You never post an expense to that account. Instead, here you are a certain way through the year, you're 6 months into your year and realizing you're just blowing the top off of HVAC repairs. Yes? HVAC repairs. Those can blow the top off of HVAC repairs. And so you realize, we're already over budget. And we're going to have more. So instead, you take that contingency fund and you reassign that portion of the budget away from contingency fund. You decrease your contingency fund from 10 down to 8, and you take the other 2 and you put it into the budget for HVAC repairs. Well, that's dynamic budgeting. You're using your budget as a tool along the year as you go, and you also have a contingency fund that you haven't decided how you're going to spend every dollar you think is going to come in. Sometimes it's revenue shortfalls that you need to reduce your projection of all program revenues. So some budgeting ideas. Transparent designated fund balances on the balance sheet. So this is one of our most common areas that we address with a new client ministry, where we're going in and doing what we call an operational review, and their designated funds are all in a mess. They're using spreadsheets on the side to keep track of all this. And it's like, no, use your software. It'll work perfectly. And there's like 3 different ways. We actually have a blog post on 3 different ways we like to see ministries use their accounting software to manage designated funds. So I just had we use a product called Go to Assist by Citrix Corporation, which lets us take over a client's computer. Just had a session with a treasurer that we were actually getting this all in the right place. He was keeping separate spreadsheets. They didn't know where they were at with designated funds. The idea of having real-time access to what designated funds are. And then general fund reserve balance, that's where, having that reserve that some of you spent this past year and getting it back is just an important part of budgeting. So when we think about budget improvements, it's kind of like that long list of litany of things that we see as opportunities in 2021. You've already learned the value of maybe having a budget that you could use as a tool, and now it's like, okay, how do we get better at that? And Corey, you got to move, Corey. Come on. Okay, here we go. This is going to have to be really quick. Vision casting. So these 3 resources and some related resources, I brought along 49 pounds worth of stuff in my suitcase. Okay. Well, I'm going to easily make weight on the way back, okay? Because I dumped a bunch of books that are sitting in there with the stacks of books. These are 3 of them. In 2021, is this an opportunity for you to really think through, okay, what is our vision statement? What's a nice, memorable, ours is a paragraph. Okay, wait, we got to get this down to something that our staff can remember. And, we're at Ministry CPA, we're trying to help others improve their financial stewardship. And helping others improve their financial stewardship. Whether it's individuals or ministries, we want to help them improve their financial stewardship. Stewardship. Oh, why would you use stewardship? Well, we're Christian people, and stewardship just like hits home to all of us, right? Okay, so it fits well with us. Identifying those core values. You can't make up core values. You identify core values. Okay, and maybe it's operationally you identify. So Wayne and I have been talking about, he's working on some of this, identifying operation as operation, what are our core values. But you can't make those up. You identify those, and then you live them out. So actually the ideal team player really helped us think about how we would apply Micah 6:8 to our team, and what we identify as the kind of people that we want to hire, the kind of people we want to promote and encourage, and they need to fit a Micah 6:8 type of mentality. Aspirational values, uniques. Again, a fair amount of notes here. And we've picked up some ideas from some of these books, both from Lencioni. He was saying Lencioni. I think it's actually Lencioni. I was saying Lencioni as well, but I think it's Lencioni. And then Wickman. We picked up a couple of those ideas. All right. Any comments, thoughts, questions about CAA, budget improvements, or vision casting?
CAA, do you get that through the bank still, just like you did with the SBA?
Yes, the PPP2.
Still have to get through the bank.
PPP2 is through your bank.
Those couple things that you mentioned about opportunities.
Right.
That first slide is for ministry, correct? Like for your ministry, and the other one was more for personal. Is that correct?
So the PPP2 is ministry.
Yep.
The employee retention credit is for ministry.
Yep.
The the Families First is ministry. They're all ministry.
They're all ministry.
Yeah, well,
okay.
the only one that's not ministry is that your people, your donors can get $600 above the line. That's the only thing that's personal.
Okay.
Otherwise, even the $5,250 tax-free thing, that's the ministry. And I want to touch on that some tomorrow because I feel like there's an area we're not in compliance.
Okay.
I could be wrong. I hope I'm wrong, but I think this is the way to get in compliance if you're not. So we're following these 2 areas quite carefully with some of our clients, Bostock versus Clayton County, Georgia, and avoiding becoming a target. So what was Bostock versus Clayton County? That was the Civil Rights Act, Supreme Court saying, no, when it says sex, it also means transgender. Okay, that was all very disappointing to all of us, right? Well, we actually have a good number of clients that also have schools. And some of you have schools. And some of your churches have schools. And one of the things that they have to do every year, even if they're not required to file the 990, they have to file this. So the Schedule A and Schedule E issues okay, which say this: we comply with the non-discriminatory requirements of the Civil Rights Act. We don't discriminate based on race, etc. Well, you don't have a problem with that. You're great. You're fine with that. And we don't have a single client that would be concerned about that. But we have every single client would be concerned about adding transgender, transsexual, saying we don't discriminate based on that. Well, there's no protections in there, at least not in the Supreme Court case that I'm aware of. Now we know that we have protections, and we are in a country that has laid out those principles for more than 200 years, but we're concerned, we're following that. The court reversed the decision in the 11th Circuit in a 6-3 ruling, this is out of my notes here, holding, quote, an employer who fires an individual merely for being gay or transgender violates Title VII of the Civil Rights Act of 1964. Now, as a camp, you have to file a 990, but you don't have to attach this 990, the school part, okay? So, and we do a lot of 990s. So, we're okay there, at least not having, but when that happens, or if that happens, we probably have 15 clients anyway that have to file this Schedule E at different levels. Well, a little more than that, because churches have to file if they have schools, even if they don't do the 990. But, yeah, that's going to be a concern. Now, we just don't want to be a target. Let's not make things any worse than they already are. And that's what the last 5 minutes of this is about. So this is kind of a checklist of things in your mind. Say, okay, do we have our ducks in a row on these things? Because we don't want to become a target inordinately. So some camps, particularly camps that are owned by an association of churches, can, in some cases, escape having to file a 990. Okay, well, just make sure of that. Make sure of that. Now, it could be that you get out of 990, but you still have state requirements to be filing. And, we've had to help several ministries get in compliance with the state, because the 990 thing's on the radar, but they're not be aware of the state issues. So make sure you're in compliance on the state level as well as the federal level. This whole area of compensation compliance, and we're going to touch on some of that in my workshop tomorrow. And again, that PowerPoint is going to be on our website at Ministry CPA. And if you're not attending that one tomorrow, that's no worries. You can go grab that and at least get you some ideas. You can always call us. If you call us and you say, Corey or some of your ministry team, could they give us an hour of time that we could just talk through some issues? We would gladly do that, okay? No obligation on your part, and frankly, no obligation on our part. We might say, when we're all done, and I doubt we would do this in your case, okay? But we also, we have some conversations with ministries that we don't care to have as clients, okay? I'm just saying it. And I'm not going to be discourteous to them. I'm going to try to, answer their questions. If I can squirm out of even the hour, I will, okay? But ultimately, they're professing Christians. I just believe in, deliverance ministries are ministries that deliver people from addictions, not delivering Christians from being possessed by demons. That was one just last year, okay, where he said, now we're having a conversation, and so tell me about your ministries. Well, I have a deliverance ministry. Well, I'm sorry, but I do not believe at all in my heart that a Christian can be possessed by a demon. And, I squirmed out of that one, okay? But take advantage of that. That can be helpful to you, okay? We're willing to do that, and wherever the conversation might go. In the notes page view about compensation compliance, though, one of my people put together a blog post. She kind of made a checklist of areas that she would say, check, 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 check. That list is in this slide. We do some things with UBIT, unrelated business income tax, to make sure you got that covered. Non-mission related income, especially when you have debt, can get you in trouble there, or at least need to file some additional filings. Rental of real estate is exempt, so a lot of ministries will rent some of their real estate. That's exempt from UBIT. Sales tax compliance. You got a bookstore, you got a snack shop, you got sales tax issues. local real estate tax exemptions. Okay, so you've got staff housing. Don't be renting it out to somebody in the community. You're gonna lose your tax exempt status on that property. So those kind of issues. And then kind of a list of some others. And the others are gonna have to wait. Those are in my notes page view, but okay, so we are actually, we started late. We were told to give it a little extra time. We started late and we're ending on time, okay? So you can just go and really enjoy that beautiful weather outside, or you can just stay and talk with we can stay here and talk with each other. But I'm not going to decide that for you. Okay? You're good. You're okay with that. You're good with that. All right.
Thank you.
Thank you much.